Welcome back, and that was the Finance Minister along with the entire list of Finance Ministry secretaries who were speaking. There are several snatches of conversation. Obviously, the fine print of the budget does usually every year have a lot of details. One of the key points, the Finance Minister, as I heard, saying that the LIC IPO is going to happen this year, and I'll take that point up with Abha because what it means for the markets, as well as the broader conclusion that we have at this stage, that the fact remains that some of these projections are actually on the lower side, and perhaps the strategy of the government and the policy makers in the finance ministry is let the markets, let economic participants be positively surprised on the upside once you have better than expected collections. Last year's or the current financial year's taxation collections is a moot point. I have with me our guests who are with us, and also Shubha Rao, who is an economist and founder of Quant Eco Research. Shubha, Mr. Ved Jain, former president of ICI, and Mr. R. Gopalan, former DA secretary, are also here with us. And as we get other guests, we will continue this debate. I want to take the first question with you. Explain in the simplest way that you can the whole conundrum around whether this is a fiscally conservative budget where expenditure is being compressed, and while there is a very significant capital expenditure outlay that is being spoken about, that necessarily will not get spent in this financial year and would perhaps spill over into the next, and that is why the maths is adding up in a roundabout manner.
Thanks, Siddharth. Always a pleasure talking to you. I think the theme of the budget, like last year also, has been on, under-promising, over-delivering as far as revenues are concerned. And that's precisely what is happening even in the current budget that got presented today. I would think that, on a headline number, it looks like an expansionary budget, but not really. So if you look at the numbers closely, if you look at the total expenditure, it is growing just under 5% over the revised estimates of the fiscal 22. So I'm not just sure whether we can call it really an expansionary budget. What is key and moot point is the expenditure switch, which to me is a continuity of the theme of the government that focus on the quality of expenditure, that is enhanced capital expenditure.
Shubha, give us an example. Sorry to interrupt you. Give us an example so that the people can follow this. One example of the expenditure switch.
Now, you typically at expenditure, you look at revenue expenditure, you look at capital expenditure, right? Now, over the last 3 to 4 years, we have seen capital expenditure to GDP ratio, right from fiscal 20 budget till now, as a ratio to GDP, it has improved fairly significantly, I would say, from 1.7 to 2.9. Not a small achievement by any measure. So what I'm trying to say is that over the last 2 to 3 years, we have seen the emphasis laid by the government on capital expenditure and not as much on pushing the revenue expenditure, because typically revenue expenditure. So
you agree that the numbers are credible?
I would say credible to a conservative if I were to trickle down the nominal GDP assumption, which the budget has taken at 11.1. Our expectation is the nominal GDP will be anywhere between 13.5%. Right. And why does nominal GDP become important? Because that trickles down to tax collections. And tax revenue collections at net basis have been taken at a very conservative level. So if you look at net tax collections, you are going to look at a 24% growth seen in the fiscal 22, coming down to under 10% growth. Now, if I'm assuming a 7.5 to 8% growth, which may be marginally lower than what the government or economic survey is putting out to be at 8.5%, even with 7.5 to 8%, I would believe that tax revenue collections could surprise us on the upside.
So could surprise. Shubha, just stay with us, Shubha. We've got Cyril Shroff also joining in. Mr. Shroff, great to have you with us. Let me first get your key takeaways from the budget this time around, how you would interpret it, the kind of implications it has for industry, for growth.
So I think we have to see this as a continuum of as kind of a series of reforms, and you have to see it in the context of last year's budget as well. So I think one of the things which I envision is that this is going to have a lot of network effects. I think it solidifies a lot of themes from last year. But the 3 or 4 big points that came across to me was, one was the obvious one on, of course, very substantial increase in the capital expenditure and infrastructure. The second, I thought, and again, this is a slightly different angle which I saw it from, is the strong desire to clean up a lot of the regulatory cholesterol in the ease of doing business, including coming up with a new framework for private equity and venture capital, and just getting deeper into those issues. So that's a great signal. And a third kind of a qualitative but an important point, of which we can see some evidence in various initiatives, is that we are gradually but decisively moving to a more trust-based governance.
Okay.
Whether it's how some of the tax proposals or how we're seeing some of the sunrise sectors as well. So directionally, in terms of how we see the relationship between the state and the private sector, these are big steps.
Mr. Shroff, I do want to ask you on divestment as well, and the kind of targets that have been outlined there. Do you find them conservative? Yes, she did mention the LIC issue will go through, but outside of that, the overall target, did you find that conservative?
Yes, it is conservative, but I think it's better to be realistic than to be over-ambitious.
Mr. Shroff, Siddharth here, and good to have you on the show. I want to take up this aspect of the special economic zones, and not to make it too technical for our audience, but the special economic zones in 2005 were supposed to be a showpiece of India's manufacturing prowess along with exports. We saw this announcement that the act will be scrapped. So two-part question. I haven't heard of a major economic legislation being at least an announcement to scrap it in this manner, and then a replacement thing where states will be participants. States were already participants with the SEZs. So explain that to me. Have you had some occasion to figure out what is the intent?
So the announcement, of course, is very cryptic, but I can just kind of imagine what is underlying it is really to bring in the states into the conversation, especially because many of these issues, especially relating to the land, they tend to be state issues. So you can't really further this unless you have the states on board. So I agree with the solution that let's replace it and do it properly rather than do some patchwork. And whilst replacing it, get the states on board as well. And this is...
Should the investors, Mr. Shroff, those who have invested in SEZs, it's not as if there aren't SEZs, there are in fact some very large undertaking. Should those investors be worried that things could change suddenly?
I think they're going to change for the better. Why should they be worried?
All right. Abba, sorry to take this point. I have just one bugbear that I have been chasing through the day. This is the crypto tax. And a disclosure or a statement right up front. I am not disagreeing with the tax. I'm kind of confused about the manner in which it has been done in the absence of a legislation and the treatment of losses on a punitive basis. Your thoughts on that before we go to our other guests, including my colleague Saurabh Majumdar, editor of Business Today.
Is that for me?
Yes. Mr. Shroff, that question is for you.
So clearly, I think the fact that crypto is resulting in kind of exposure to a lot of individual investors, as well as this is something which the government needs to get its hands around, has been driving this. So personally, I don't see a legal problem in taxing it, even if it is pending the coming out with formal legislation, because there is somebody who is earning income on this, and there is no reason, if you look at it from the eyes of the revenue, as to why that should escape tax. So I don't see a fundamental problem with it.
Shubhda, you talked about Under-promising, over-delivering, and clearly that's the agenda. But a lot that gets lost in the fine print. So, for instance, while it was much talked about after the economic survey, no mention today of factors that could lead to or play a spoil sport in terms of inflation. Given some of the targets that they've outlined, the measures that they've suggested, as these are implemented, what do you feel the resulting impact will be on growth, on inflation, on jobs?
Point one, typically a very highly expansionary fiscal budget leads to inflation. But within that, the fine print is the quality of expenditure. If the expenditure is on revenue side, then it is obviously inflationary. But if it is on creating real assets like a capital expenditure, it's not as inflationary. So that is one point I would like to, make here. The second point is inflation has to be looked at from the domestic drivers of inflation vis-a-vis the imported inflation. Currently, globally, what we are seeing is elevated input costs, elevated commodity prices, and what the overall tone was that everyone is wary of the imported inflation aspect, which we are takers and we cannot influence much, particularly in terms of crude oil prices and its cascading impact on a lot of India macro dynamics like inflation, like current account balance, and also on the fiscal deficit. Now, having said, as long as the focus is on creating supplies, augmenting supply side and focusing on supply side of economics, I think to that extent, inflationary pressures cannot be deemed as runaway inflation.
So, Shubhda, very quickly, what's your outlook for next year as far as inflation is concerned? Because that's a worry, oil prices, everything else.
We are looking at somewhere close to about 5 to 5.5% of inflation.
Within range.
If the commodity, the commodity prices remain where they are.
Okay, Abha, I'll just take over for a moment with some fine print from the finance bill shared by Karishma Asudani, who's at the finance minister's press conference. There was a question regarding the treatment of crypto, whether it comes under digital assets. Their clarity, and I'll quickly read, the virtual digital asset as per the finance bill is any information or code or number or token generated through cryptographic means or otherwise, providing digital representation of value, and keeps on going with promise of representation, unit of account, financial transaction, is treated as a virtual asset. Non-fungible tokens, Abha Bakaya, NFTs, if any of you there wanted that clarity, NFTs or any other token of a similar nature are also covered under this new clause, and any other digital asset as the central government may by notification want to specify. Saurabh Majumdar, we were having a very intense debate with Mr. R. Gopalan and Ved Jain, who are still with us. Mr. Shroff is also with us. I took that question with him. Saurabh, would you want to come in from the optics of this move, if not the tax specifics as far as the crypto taxation move is concerned?
Well, Siddharth, I think at the finance minister's presser, she was very clear that there is no reason why, as the government or as the finance minister, she cannot tax profits just because a law is yet to be sort of implemented. So as long as, like Cyril said, as long as there is profits being made, the government has a right to come in to claim its share of a tax. Sure. Now, yes, you could say that it looks punitive because it's 30%, and then there is no set-off against of losses against it. But the aim, as I said earlier also, is very clear. The government, this is not rocket science. The government and the RBI have been saying very clearly, particularly the RBI, has been dead against cryptocurrencies, these private crypto assets, and said that cryptocurrencies could pose a threat to financial stability. And we have seen the kind of runaway, markets, the way the markets have moved in the crypto space. Right. So the clear idea is, of course, now how the RBI will bring out its digital currency is very, very important. We'll have to see how that is rolled out. what that entails, what kind of explanation to the public RBI gives in terms of how the public will be handling that that digital currency. But it's very clear that the government wants the currency part to be handled by itself and the regulator, and the crypto assets will be therefore in the private space, will be taxed accordingly in terms of the profits which are being made. So it is a signal also, apart from a tax move.
We also are going to be joined by Sumit Gupta, the CEO of CoinDCX, one of the largest crypto platforms in the country. And when we get him, Abha, we'll ask him this question. Mr. Shroff, very quickly, sir, Mr. Ved Jain and I were having this debate, and he alluded to the fact that the treatment of losses on crypto trading being sort of punished is because it is almost like a sin tax. Those were my words, and it's being treated akin to gambling or illegal activities. Would you agree with that postulation?
So I don't want to use the word sin tax, but prior examples of where losses have not been allowed to be set off is usually when in case of speculative income. So there is a parallel to be drawn there of the fact that there is effectively a sneer by the finance minister on this type of income, and therefore not allowing the set off of losses as well. So it's clearly this is a challenge for all regulators in terms of how they get their hands around this new type of asset. So it works, I think, through a set of disincentives and nudges, and this is one of them.
All right, Dr. Gopalan, I want to ask you. Some are saying that this is a budget that's of course well packaged, and it's covering a lot thematically, but not necessarily giving a forward-looking outlook. Would you agree? What would you say is the one perhaps warning sign, if any, that you find? Is there any fault that you can find? Of course, there's criticism, no meddling with direct taxes, not enough for the underprivileged, and there will always be criticism. But do you see any warning signs in the budget?
For the growth for next year is concerned, I'm worried about the state government's spending. After all, the growth comes through both central government and state government spending.
Right.
And the effect that has on private investment and other investments which is coming.
Got it.
Now, state governments are really, strapped for cash. And there is they are spending money on COVID-related issues. Their supply chain disruptions are taking place, which is reducing getting the economy a little bit down. So my worry is to what extent states are going to come back to the projected level of expenditure they should do to get that 8.8 to 8.5% growth rate for the whole economy. That's my first worry. The second worry will be I'll be having on inflation because of the high, borrowings which is, coming up. And already monetary authority, RBI, will be hard put to ensure that the GSEC rates are, kept low through various other stratagems. But still, my view is that there is bound to be some amount of problem as far as inflation is concerned, at least in the first half of next financial year.
Okay, talking about borrowings, and Shubhda, there was quite a reaction on the bond markets today. We didn't see any talk of the global bond issue, but in terms of the borrowings, we definitely saw a reaction coming in. Talk to us about the kind of impact you foresee on that front. Again, reassuring comments coming in from the government in terms of overall reserves and so forth. But the short-term impact was clearly felt on the bond market today.
I think bond markets did not have a great day today.
Yeah.
It was a double whammy. One, of course, there was a large net borrowing program. And in the presser, I just discovered that bond indices are not coming anytime soon, inclusion of Indian bonds in the global indices. So that's a double whammy. But having said so, I think, yes, the entire task is going to be very carefully cut out for RBI as to how to manage this large borrowing program. Of course, the gross borrowing program of 14.95 lakh crore, as has been put out in the budget numbers, needs to get adjusted a little bit downwards by about 60,000 crores, because just 3 days ago, the RBI executed a switch in its securities. So I think through the year, RBI will have to keep an eye on two things. One is how does it carefully calibrate liquidity, because it needs to facilitate a large borrowing program, ensure that the bond yields do not go so completely out of whack that it cascades into the rest of the interest rate environment for the economy as a whole, and the cost of borrowings go up. RBI will have to use all the measures and tools that it can to ensure that there's more of a manageable cost of borrowing for the government and for the private sector.
Mr. Jain, one of the fine print points that is coming up, and I wonder if this is important, because we had seen uptick in one kind of real estate, which is a clause which says TDS on immovable properties on either agreement or stamp duty value, whichever is higher. Is this significant?
I don't think it is that significant. It is basically a correction. The government intends to capture the correct figure of circle rate. So sometimes what happens when you file the return and the assessing officer does not know what will be the circle value. So in order to capture that, they have said that higher of that circle rate will be applicable. So that's the idea, basically, to capture the information.
Okay, thanks for that input. We are joined by Sumit Gupta, CEO of Coin DCX. We were having a very intense debate, Abha, on crypto taxation, crypto policy. Sumit, welcome to the show. I'm sure you've been giving commentary on this. Crypto suddenly became a headline because of the taxation aspect. What's your view? And I ask you this, remembering that in the India Today conclave and otherwise also in our conversations, you have always been a supporter of taxation, perhaps as the first step to more formalization of this in the Indian economy.
Definitely. Thanks for having me. And I was actually talking about this in the past as well, and I was expecting something around crypto taxation in the coming in this budget speech, which actually happened. And at the onset, it's a very progressive and a very futuristic budget. Including crypto in the tax regime is a huge encouragement and step in the right direction. But I would also like to point out that it's two steps forward, but one step backward, in the sense that while taxation is bringing legitimacy to the industry, the quantum of taxation is something which is quite, sort of discouraging. The high tax slabs. Also, specific sections regarding TDS, 1% TDS, still confusing. There's a lot more clarity that we are, we are trying to interpret. Which might not promote trading in crypto for the normal investors. So overall, just to conclude, very happy day for the industry. A slightly bittersweet, but largely positive. However, we must remember that this is the beginning. As I mentioned in the past, taxation is the beginning towards the larger process of crypto adoption in the country. I still feel the multiple discussions that needs to happen to come up with better systems or processes, but hopeful that right actions will be taken and crypto industry in India continues to grow. We will also continue to share our thoughts and feedback on how we think
Sumit,
of the tax slab.
Were you surprised at the quantum of the hike, even if you were anticipating some kind of taxation? Were you surprised at the quantum?
Yes, absolutely. 30% flat tax rate of 30% is quite high. I didn't expect it to be that high. Honestly, I mean, I was expecting this to be treated more like stock trading and a taxation regime of that is something which I was expecting, but 30% I think is on the higher side.
Sumit, important point, and we have noted practitioners on the panel before you joined. Is this like a sin tax on crypto? And you make a very valid point. There are thousands or millions perhaps who have invested. Mutual funds are treated differently. Equity is treated differently. What's your view on crypto being treated almost like a sin tax?
The way I see it is, I think if you put such high taxes on crypto, it's definitely gonna dampen the trading activity. My worry is that if you put such high tax rate, it might also be counterproductive in some sense. I mean, people will have incentives to figure out some other ways to do trading because, honestly, 30% is a lot higher, and especially more than that, the 1% TDS, that's also not very productive to the entire industry. Just imagine if an exchange is, having liquidity, and what if because 1% TDS will not attract market makers, how will they what is their incentive to do market making on exchange? I think that's just gonna suck up the liquidity from the market. A lot of people who do trading are scalpers. They basically place 5 to 10 trades in a day. They will also not be very excited. But for investors who are holding it for the long term, it's something that they'll have to pay 30% tax on it, right? Whenever they realize the gains. But overall, I think for the trading activity, it's not that encouraging. I'm happy that at least crypto got the recognition. It's taxed. People will not have any confusion now on that, whether they can invest or what are the tax guidelines. So clarity is good, but I think that there needs to be a lot more work to be done around tax guidelines. There's still a lot of confusion, in terms of how, that 1% TDS is worded 194 as that. There's a lot of confusion in terms of how it is worded right now.
Absolutely. And in fact, just to update those viewers who may not know, there's no crypto bill, at least in the budget session. But Abha, I think we have had a long discussion. Wrap it up for us as we thank our guests.
All right, Sumit, great to get your thoughts in. Cyril Shroff, Mr. Gopalan, Shubda, all of you, thank you so much for joining us. Mr. Jain, great that you all took the time out. Saurav Majumdar, of course, we'll keep coming back to you as well. Great to get so many varied thoughts on the budget, and clearly it's a budget that's on track. The economists still not completely 100% certain that there aren't going to be red flags along the way, but we'll have to wait and see.